Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Thursday, September 22nd. The sell-off that started on Wall Street yesterday has circled the globe and come back around to hit U.S. stocks for a second day. The three major averages are all down about 3% after posting similar losses yesterday. And in Europe, things are even worse. Frankfurt's benchmark DAX index and the FTSE 100 in London are both falling nearly 5%. While the CAC 40 in Paris tumbled more than 5%. The catalyst for all the selling pressure was the Federal Reserve's economic outlook yesterday afternoon. It warned of significant downside risks to the economy, and for the first time specifically cited strains in the global financial markets, referring to the European sovereign debt crisis. It was these risks that prompted the Fed to institute a tactic first tried in the 1960s, nicknamed Operation Twist. The central bank will swap shorter-term U.S. Treasury bills for longer-dated notes in an attempt to further reduce borrowing costs. But some investors may have been hoping for more aggressive steps to boost the struggling economy.
Operation Twist does seem to be having the desired effect on Treasuries. The prices of longer-term bonds are rising, and the yield on the benchmark 10-year note is dropping to a record low below 1.8%. But the 2-year note is holding steady, trading right around 0.2%. Continued concerns about the debt crisis also continue to weigh on the euro this morning. It's sinking close to $1.34 against the greenback. And the dollar's relative strength is taking a major toll on commodity prices. Gold is tumbling $70 to around $1,740 an ounce. And crude oil is dropping all the way back near $80 a barrel, a decline of more than 6%. The asset markets aren't having much reaction to a drop in the number of Americans seeking unemployment assistance last week. Initial jobless claims fell to 423,000, roughly in line with economists' estimates. But that number is still much higher than the level usually associated with a healthy labor market. And the 4-week average, a more accurate gauge of employment trends, rose to its highest level in 2 months.
Another factor likely to weigh on the market today is a disappointing outlook from FedEx. The shipping giant is viewed as a bellwether for the overall economy because it does business with so many different industries. It now says higher fuel prices and sluggish growth in the global economy will cut into its bottom line for the full year. That weak forecast is outweighing a relatively solid quarter, and shares of FedEx are tumbling more than 7%. A couple other big names are on today's earnings calendar. Discover Financial Services said its fiscal third-quarter profit more than doubled from a year ago, easily beating estimates. That's boosting the stock about 2% right now. But that's not nearly enough to make up for yesterday's steep declines. Financial stocks led yesterday's sell-off, and right now, Bank of America is down another 5%, on top of a 7% drop yesterday, after Standard & Poor's downgraded its credit ratings. Meanwhile, shares of Rite Aid are losing 3%. Its quarterly loss narrowed more than expected in the latest quarter, but the drugstore chain has been struggling since it acquired the Brooks and Eckerd chains in 2007.
Strong earnings are boosting one stock today. Software firm Red Hat is jumping more than 4% after it posted a 69% increase in its quarterly profit following yesterday's closing bell. After today's close, we'll hear from Nike, among others. But the day's biggest stock winner is likely to be Goodrich, surging 10% right now. The aerospace and defense contractor agreed to a buyout from United Technologies worth $16.5 billion, or $127.50 a share. That represents a 47% premium over Goodrich's trading level prior to speculation about the deal. Shares of Dow component United Technologies are dropping 7% on the news. And finally, keep an eye on shares of Mosaic today. Standard & Poor's announced that the fertilizer maker will join the S&P 500 index at the end of trading on Friday. It will replace National Semiconductor, which is being bought by Texas Instruments. That's the latest from Weiss Research. Have a great trading day.